Have you ever pondered how the exhilarating world of sports, a domain pulsating with adrenaline, elation, loss, and triumph, intersects with the cold analytical universe of investing, characterized by numbers, analysis, strategy, and risk? This question might seem strange at first. Most would picture these two arenas as polar opposites. One is filled with the thunderous roar of cheering fans, the emotional highs and lows of competition, and the physical prowess of athletes pushing their limits. The other is perceived as a detached environment of balance sheets, market trends, and financial strategies, where victory is measured in percentages and profits, not points on a scoreboard. Yet when looked at more closely, the connection between these two worlds becomes apparent. They are both driven by a high degree of passion for success, a deep understanding of strategy, and a knack for risk assessment. The athletic field and the stock market arena both demand a similar level of dedication, foresight, and patience. They require participants to learn from past experiences, adapt to ever-changing circumstances, and make strategic decisions that will either lead to victory or defeat. Sports, in its essence, is a high-stakes game where the athletes, coaches, and team owners are constantly making decisions based on a blend of skill, intuition, experience, and sometimes a dash of luck. Similarly, investing is not vastly different. Investors are always on the hunt for the next big opportunity, making calculated decisions based on economic indicators, market trends, and their own intuition. Just like how an unexpected injury can change the outcome of a game, a sudden shift in the market can turn a promising investment sour. Moreover, in recent years, the intersection of sports and investing has become more intertwined than ever. An increasing number of athletes are exploring investment opportunities both within and outside the realm of sports, leveraging their wealth and influence to find new avenues for growth. On the other hand, investors are pouring money into sports franchises, viewing them as profitable ventures, and even using advanced analytics to predict performance. This fascinating convergence is reshaping both worlds in intriguing ways. It's creating new opportunities for wealth creation, innovation, and progress. It's also posing new challenges and risks, requiring those involved to constantly evolve and adapt. Through this exploration, we are led to a new understanding of these unique but interconnected domains. Today, we dive into the intriguing confluence of these two seemingly disparate worlds. In the ever-changing landscape of the financial world, a fascinating tendency has unfolded over recent years. High-profile sports professionals, such as the popular basketball player Kevin Durant and the well-known baseball manager Billy Beane, are stepping into the investment arena. They are not just any investors. They are playing what some might call a high-risk, offense-only investment game. The game of investing is inherently fraught with risks, but these individuals appear to be embracing the challenge, undeterred by potential pitfalls. Behind their bold moves lies a strategic investment in a unique deal, an arrangement involving the online ticketing platform SeatGeek. SeatGeek has carved a name for itself in the virtual ticketing industry, offering an innovative and user-friendly platform for event-goers worldwide. The platform serves as a marketplace for live events where buyers and sellers can interact to exchange tickets. Its advanced algorithms ensure that the most relevant and affordable options are presented to the potential customers. Interestingly, it's not just the SeatGeek deal that has caught the attention of these sports professionals. Online gambling firm DraftKings, a prominent player in the digital betting industry, has also decided to take the investing plunge. DraftKings has taken a significant stake in Vivid Seats, a rival firm in the online ticketing space. This move, a clear diversification of DraftKings' investment portfolio, showing a willingness to explore new avenues and capitalize on potential growth opportunities. Vivid Seats, much like SeatGeek, is a platform that facilitates the exchange of tickets for live events. However, the company's differentiating factor lies in their unique value proposition. a customer-centric approach that prioritizes user satisfaction over anything else. They have a transparent pricing model and a strong emphasis on providing exceptional customer service, making them a popular choice among consumers. Both SeatGeek and Vivid Seats are projecting significant revenue growth in the coming years. Their optimistic outlook is based on the increasing popularity of ticketing, coupled with their strategic business models and robust technological infrastructure. Their projections suggest a promising future, with exponential growth expected in the digital ticketing industry. However, this raises an important question. Are these projections too optimistic? While the future seems bright for these companies, it's important to remember that the investment landscape is unpredictable. The market's focus on offense rather than defense could lead to potential risks and defeat. Could this high-stake, offense-only game, characterized by its aggressive investment strategy, culminate in a surprising upset? Only time will tell. But this is not just a tale of high-stakes gambles and potential pitfalls. It's a narrative that interweaves the threads of bold decisions, unforeseen challenges, and hard-earned triumphs. The current market environment, shaped by a series of global events, both predictable and unprecedented, has precipitated the rise of investment strategies that seize on these disruptions to create new opportunities. The economic landscapes that we traverse today are far more intricate than they appear at first glance. They are shaped by numerous players, each with their own roles, objectives, and strategic bets. These shifts in landscape are forcing progressive investors to view the markets from a fresh perspective, demanding a new approach that is at once innovative and adaptive. Concepts of stress and distress in relation to companies in dire straits are becoming more prominent in our conversations. These are not just buzzwords, but tangible realities that businesses have to cope with, and they present a fertile ground for investors with a sharp eye for risks and rewards. The exploration of the availability and the impact of liquidity in these circumstances takes center stage this story. An in-depth examination of the effects of the liquidity situation on distressed credits, buyout houses, and private equity investors is needed. Each of these players is influenced in unique ways, and their responses to these shifts in liquidity further shape the market dynamics. The careful scrutiny of the credit markets has revealed an interesting phenomenon. A cautiousness has permeated the field, leading to a slow but steady retrenchment. This is coupled with an increase in opportunities for special situations and distressed investors, which has resulted in a fascinating interplay of forces. In this period of market uncertainty, as conventional wisdom is being questioned and new are emerging, there is an increase in the volume and diversity of opportunities available for those willing to explore unconventional paths. These developments certainly highlight the complex dynamics at play. The interplay of all these factors has created an environment that is both challenging and rich with potential. The players in this narrative are not just passively experiencing these changes, they are actively shaping the market and finding ways to thrive in this new reality. The cautiousness in the credit markets and the increase in opportunities for special situations and distressed investors highlight the complex dynamics at play. The COVID-19 pandemic and fiscal interventions have had a significant impact on the market. This seismic event, unparalleled in recent history, has shaken the very core of the global economy. The economic shock barrels down multiple facets, leading to an array of dynamic shifts within the market atmosphere. From supply chain disruptions to massive layoffs, the pandemic has triggered a series of events that are reshaping the market in profound ways. In addition to the pandemic, fiscal interventions have also played a significant role, providing a necessary lifeline to struggling businesses and economies. A wide range of measures have including large-scale fiscal stimulus packages, temporary tax relief, and low-interest loans. These interventions have not only helped to prevent a total economic collapse, but also set the stage for potential market recovery. However, It is not just the pandemic and fiscal interventions that are influencing the market. Geopolitical factors, too, are making their presence felt. From escalating tensions between nations to the changing dynamics of international trade, these factors are creating an environment of uncertainty, which is affecting the market behavior. This has led to a cautious deployment of liquidity as investors and stakeholders tread carefully amidst the turmoil. The inherent uncertainty has also resulted in downward adjustments in equity prices, a manifestation of the apprehension felt by market participants. Moreover, there has been an increased conversation around stressed or distressed credits. These conversations, often seen as indicators of economic health, have become all the more relevant in these trying times. They provide insight into the challenges faced by businesses and economies, while also highlighting potential opportunities for market recovery and growth. Yet, amidst all the uncertainty and upheaval, one thing remains consistent: the market's ability to respond. Just as it has done in past crises, the market is demonstrating its resilience and adaptability. From the emergence of new sectors to the adoption of innovative business models, the market is finding ways to drive value even in the most unexpected of circumstances. But as always, the market responds, driving value in unexpected ways. Despite the challenges and uncertainties, the market continues to adapt, evolve, and find avenues for growth. It serves as a testament to the tenacity and resilience of the global economy, even in the face of the most daunting of challenges. Private investors are increasingly seeing the sports industry as a stable sector in this uncertain economy. This trend, charting a steady rise over recent years, shows no sign of abating anytime soon. This comes as no surprise when one considers the exponential growth in the world of sports. As sports continue to grow in popularity, drawing in swathes of fans from across the globe, they become a valuable asset for those looking to invest. Private investment in sports is a complex, multifaceted world. One where the stakes are high, but so too are the potential returns. Thus, the sports industry has become a magnet for those seeking a secure return on investment. The allure of this sector is multifaceted, ranging from its vast and passionate fan base to its ever-evolving dynamics, all of which contribute its popularity among investors and its resilience to external shocks. Turning their gaze towards the sports industry, private equity firms are positioning themselves to reap the benefits. They focus not just on the teams and the leagues, but also on the intricate web of elements that contribute to the sports ecosystem. The firms are targeting the rapidly increasing costs of media rights and live events, a trend that shows no signs of reversing. With the advent of new broadcasting technologies and the proliferation of streaming platforms, the value of these rights and events continues to surge. Aside from the conventional sectors, early-stage investors are also making their mark. They are diversifying their portfolios by funding startups in emerging sports, sports technology, and sports betting domains that are gaining traction rapidly and are poised for significant growth. These new ventures provide room for investment, supplementing the traditional focus areas and offering the potential for high returns. Emerging sports are gaining global attention, sports technology is advancing at a rapid pace, and sports betting is becoming a mainstream activity. These trends are attracting abundant amounts of capital, enabling the sector to bloom and expand. The technological advancements in the field of sports and the increasing acceptance and legalization of sports betting are creating new opportunities for investment. In summary, the sports industry's stability, its consistent evolution, and the diversity it offers makes it a desirable destination for private investment. Early-stage investors are also funding startups in emerging sports, sports technology, and sports betting. In a nutshell, the intersection of sports and investment is a dynamic and evolving landscape. This merging of two seemingly disparate worlds has created an intriguing and ever-changing territory. where the boundaries are continually redefined by the forces of innovation and competition. This landscape is shaped by global events that create ripples of change. Each headline, from the Olympic Games to a local rugby match, can sway investor confidence or create fresh opportunities. The thrill of victory or the sting of defeat can send shockwaves through the investment world, making it as unpredictable and exhilarating as the sports it invests in. Market forces, too, play a significant role. The economic climate, the rise and fall of stock prices, and the fluctuating fortunes of companies all contribute to the dynamics of sports investment. Each shift in the market, whether gradual or abrupt, can open up new avenues for investment or close existing ones, making the sporting market a vibrant and dynamic field. The third piece of the puzzle lies in the innovative strategies employed by investors and sports professionals alike. These strategies, born out of a deep understanding of both the sporting and financial worlds, the tools with which these players shape their respective landscapes. They rely on in-depth analysis, keen foresight, and a thorough understanding of trends and patterns to navigate the ever-changing terrain of sports investment. In addition to these, the personalities involved in sports investment add another layer of excitement to the mix. High-profile investors, successful athletes transitioning into the business world, and astute sports administrators all bring their unique insights and perspectives. They are the bold, daring players who are not afraid to take risks, who see potential where others see obstacles, and who, in essence, shape the future of sports investment. And then there's the thrill of the game. It's a thrilling game, not unlike the sports that spark this investment fervor. The thrill of the chase, the tension of a close match, the unpredictability of the outcome. These are the things that make sports so captivating. Sports investment is no different. Where the stakes are high, the players are determined, and the outcomes can change in the blink of an eye.